Okay, folks, it is the 4th of May, and today is a review of what we were trading in the live trading room for the FTSE and the DAX. So for the FTSE, when we opened, before we opened, we issued our trade plan. And really, this was just summarizing that last week we were looking for buys. We've had weeks of successfully buying the FTSE above the 57.90 level. We got the breakthrough once it got through there, and we were buying. But once it broke back, we wanted to be a little bit more cautious buying this market. So that was really just pointing out that unless we can get above 58.16, we just need to be, if we buy the market, we need to be a little bit selective on risk and stops, and make sure that if we do lose, we don't lose too much. There was a double extreme gap as well in the FTSE. That was a well trade, but that completed pre-market, so nothing to do there. 57.21 needs to break. Really, what I was saying, the reason I put that was it was 15% ATR below, which is, I think it was around 24 points today, below Friday's lowest traded price. So really, I was just thinking that there could be a false break below Friday's lowest price, and then we see a rally up. So that sort of factored that in. But actually, we went a little bit low. We went down to around 57.06 and before rallying. Short-term direction, we're negative below 58.20. That means actually if we get rallies back up to 5800 to 58.20, it's worth looking to sell them, because that's a big technical level. But long-term was still positive above 550. So obviously there's a little bit of conflict between 5550 and 5820. So really we could be looking for buys and sells given we're in this range. 5-minute bar, I was going to confirm after the open. So we'll see how we traded that. Spike, there was no trade. Closing gap, no trade. Swing trade, no trade. So actually the only system trade we had today was the 5-minute bar. So let's go across now and see how that played out. All right, this was the opening 5-minute bar. Now, really quite a big one on this opening 5-minute bar. Let's just do some lines across here. So we had this level here. Let me just get rid of that. And let's put a line down here. So that was the opening range, pretty big. And what we were saying here is that we in this first 5 minutes, we'd seen the price action dive almost, over 50 points, and then get bought up again. So this was the false break I was thinking that might happen today, and we get this rally back up to 5800. But actually, again, it went a little bit lower, went down to 5705. But what I did say in the live room was that if we got the break above the 5-minute bar up, we could look for a 50% retracement after that to get long with our stop below this level and target 1-to-1. So that means if we're risking, say, 20 points, we'll target 20 points. So that's basically what 1-to-1 means. So it took a bit of time, and also there was another caveat on this one. We needed the bar to break within the first hour and a half. So actually, when it broke by 2 points higher, it was let me just show you. Actually, I can't move it up, but this was 40 minutes after the open. So well within the time restriction. So then, of course, we're looking for a 50% retracement. So 50% retracement is, we basically, before it started to retrace, we take it from the highest price to the lowest price of the day. And a 50% retracement is basically at 75.40. So that's where, that's basically where you're looking to get long. So where's your stop going to be? Well, it's going to be 2 pips below. It's going to be 2 pips below the bar. So the bar was 57.05, so your stop's 57.03. So you know, almost 40 points stop, around 37 points. So what we're looking for is we're basically, once we're into that trade at 40, then we want to be basically looking for a target at 77, because if you're risking 37 points, then you need to target 37 points to make the trade 1-to-1. So basically our target is up at 75.77 at this point in time. So it retraces, we get in here, then it goes a little bit lower, doesn't hit our stop, then moves up. Actually, for our pro traders who work for us every day, we actually said once it got up to 57.60, we recommend to take half profits and pay for a stop below this swing low here at 20, which kind of made sense. That means the trade is risk-free, but that didn't really matter. Eventually, the market moved up and hit our target at 57.77. So that was a nice 5-minute bar. Just to note as well that Ian, who's one of our pro traders, had the win rate on the 5-minute bar at 84% chance success rate today. So, his stats also indicated that the 5-minute bar was worth taking today, but we just traded it differently. We waited for it to break and then do that 50% retrace, which gave us favorable risk reward and meant we could get a lower target than the actual full 5-minute bar length, because remember that first 5-minute bar was really quite big today. What else to note? Well, we're back towards 5800 here, so we'll see. I mean, it's the American session now, so it's not a great time to be trading, so I'll probably wait till the morning now. One of my rules is really not to open trades once the American market's open, because the American markets do influence the FTSE in the afternoon, which reduces our edge. That's why a lot of our trades we like to take in the morning session whilst the American markets are shut. But what we'll see tonight is I want to see, do we get a close above 58.20? That would obviously turn things short-term bullish, but if we don't, then it might be that we're back shorting this market tomorrow if we get a failure between 5800 to 58.20.